Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, it is all about institutions, and more institutions. So when we start to talk about mass adoption and the direction in which things are going, we have no farther to look than what these institutions and what will be considered smart money, supposedly, is going on in the background. So let's jump right in. So first up, let's take a look at the market today. So I woke up and it looked like a pretty good day. It's almost 9,500 for Bitcoin. It is May 28th, 12 high noon Texas time, and looks like we've got Ethereum blasting through to 214. Fantastic. Tether's still sitting at 3. XRP still sitting at 19 cents. Fantastic. 237, 190, 44. And let's see on the 24, which is this middle column. Let's see if there's any huge breakout that jumps out at me. And not too. VeChain, hey, 4%. Fantastic. Good for you, VeChain fans. Hedera hash graph making a nice 15, almost 60%. Fantastic. Interesting stuff. All right. And that's about as far as I'm going to go. All right. So Bitcoin holders, congratulations. Look like it's a good day. Let's see if that trend continues. But what we really want to get into is what's going on with these institutions. But before we do that, I want to make mention of a story we talked about yesterday. So in yesterday's video, we talked about what's going on in the economy and how it's kind of rolling over in the cryptocurrency digital asset market. But more importantly, we talked about there was a call from Goldman Sachs where they invited all their different customers and investors. And people were excited because on the invitation it said, let's talk about Bitcoin or gold investments in Bitcoin. And people thought it'd be great, fantastic. I didn't think it was going to be. And of course, during that whole call, they just bashed Bitcoin. It was pretty awful. So we talked about it yesterday, but there was an article in Daily Hodl, and it had the Winklevoss twins, and they made some great points that I think that everybody should be aware of moving forward, especially when you're trying to talk to people that you know about as far as what Bitcoin is, what cryptocurrency digital assets are, and how things are going to go moving forward. So what they said in the slide, it was pretty funny. It was pretty interesting, I would say. And they said, this is what Bitcoin is. Bitcoin is not an asset class. Cryptocurrencies and digital assets are not, which is funny to say, digital assets are not an asset class. So, okay. So they say Bitcoin does not generate cash flow like bonds, don't generate any earnings, do not provide consistent diversification, do not dampen volatility, do not show evidence of hedging inflation, and so on and so forth. So what the Winklevoss twins said, and I thought was pretty interesting, is they had a couple different tweets, and they said, hey, first off, because on one of the slides it said that it's used for illicit activities, and Tyler says, in 2019, 2.8 billion in Bitcoin was sent to currency exchanges from criminal entities. Fun fact, Goldman Sachs facilitated 6 billion in money laundering via 1MDB scandal between 2012 and 2013, which is exactly what I said in the video. I thought maybe Tyler just stole it from me. Just kidding. I'm pretty sure he doesn't watch the channel. Anyhow, Cameron says, and this is the big thing I think everybody should know. Bitcoin was declared a commodity by the CFTC in 2015 in the coin flip order. So yeah, it's an asset whose price is set by supply and demand. Just like gold, just like oil, it is a commodity. So when you're talking to people about Bitcoin, just remind them that it was deemed a commodity in 2015. And it's just like gold, just like oil, just that you can't physically touch it like those two things. Even though, year to date, 2019 and even 2020 so far, it is whipping oil pretty soundly, and S&P 500, and the Dow is actually very competitive. So what are you going to do? And this one was interesting. So Tyler states, Goldman Sachs, this is what they were saying. We do not recommend Bitcoin on a strategic or tactical basis for clients' investment portfolios. And he said, Google Translate, we don't want our clients to buy Bitcoin and realize they don't need us anymore. So here's my question to you. Do you believe that this is actually true? Or do you think that Goldman Sachs actually believes what they are saying? Do you believe that they think that Bitcoin is just a flash in the pan, it's going to go away, it's not going to be any problem? Or do you believe that they're doing it for some nefarious purposes to kind of shoo it away so that people don't invest into Bitcoin and they can invest into what Goldman Sachs is actually pushing? Let me know in the comments below, because I read all the comments from yesterday's video and they were pretty great. Actually, they were pretty entertaining, so I want to say thanks to everybody. So And lastly, Cameron says Paul Tudor Jones. Paul Tudor Jones. If you don't know, Paul Tudor Jones is an investment legend. He's got the Tudor Jones or Tudor Group. They've got billions of assets under management, and he said he's going to get into Bitcoin futures, which is odd because he is a traditional market kind of guy. But Cameron says, look, Paul Tudor Jones isn't waiting around for approval from the establishment to buy Bitcoin. Neither should you. Do your own research. Build your own conviction, avoid groupthink. And it's a solid point, and I just don't think that everybody's going to get it. So if people ever talk to you about it, just explain to them what it is and have them do their own research. And then remind them, year to date, Bitcoin is really overperforming. Well, I mean, not overperforming, but doing very well as far as 2020 goes. Now, 2019 did pretty well. And then if we take a look at different things, and you can take a look at or yesterday's video, and I go over year to date for every single year that Bitcoin has been around since 2011, and how it's done year to date over traditional assets. So that was it. Just thought it was interesting. Let's move on to the top story. So first up, this is the 2020 Crypto Hedge Fund Report. I was actually looking for the JPMorgan report. I could not find it anywhere. But this one came up, which is pretty interesting. This is from Waterhouse Cooper. If you're not into finance, it's okay. Waterhouse Cooper is a multinational professional services network of firms headquartered in London, UK, operating as partnerships under the PwC brand. The firm is present that was created in 1998. Waterhouse Cooper, so on and so forth. So if you don't know, they do a lot of auditing, but they are a huge conglomerate corporation, and they are everywhere, and they do everything. So if you are in with Waterhouse Cooper, it means you've pretty much made it, and you're one of the big boys. So when I see Waterhouse Cooper make a report, I stand up and take notice. I didn't know this even existed. I don't think this has been anywhere. So I thought it was fascinating. Let's move on, take a look. So before we delve into it, here's the key takeaways. And I like to read, the summaries first, because then I can go through and kind of really break the information down. So the size of the market and assets under management, they estimate the total AUM, or assets under management, of crypto hedge funds increased from $2 billion in 2019 from $1 billion the previous year. So imagine that. They doubled essentially what is going on in those hedge funds just in 1 year. So when we started to look about what is happening, what is moving, how things are going from a little to a lot, how things as far as mass adoption is going, we just have to look at these reports and see what is actually going on. Where is the money coming from? Who is getting in? And we can see that it's institutions. So also, it states the percentage of crypto hedge funds with assets under management of over 20 million increased in 2019 from 19 to 35%. So again, almost double. The median AUM at fund launch was or is 2 million, indicating that funds have generally seen a 4x increase in assets under management. Amazing. Investor types and average ticket size, the vast majority of investors in crypto hedge funds, 90%, are either family offices or high net worth individuals. So when we start to look at what smart money doing, this is what they're doing. They're investing into our market, and that's what we want to see, right? Performance and fees. Now, this was pretty impressive because with that little notice that Goldman Sachs that we talked about over here, when we take a look at the crypto hedge funds, what was their return? The hedge fund return is plus 30% in 2019 versus 46% in 2018. So went down a little bit. I would love to see what's going to happen here as far as 2020 and how the other hedge funds are doing in the traditional markets. But I can tell you right now, plus 30%, I'll take that all day long or all year long. I'm pretty happy with that. Now, if Goldman Sachs can do that, sure. But I think they're actually decreasing in what is going as far as their returns. I could be wrong. Fact check me. Put it in the comments section. Median management performance fees remained unchanged at 2% and 20% respectively. So imagine, you have this return of plus 30%, but you also have fees. That's the beauty of hedge funds. If I was smart enough, I would start my own, but I have no ambition, so that's it. But those fees, that's a killer. Although the average management fee increased from 1.7 to 2.3, and the performance fee decreased from 23 to 21. Great. And then finishing it all off, fund strategies, activities, and trading. Most crypto hedge funds trade Bitcoin, 97%, followed by Ethereum, 67%, XRP, 38%, Litecoin, 38%, Bitcoin Cash, 31%, and EOS, 25%. So, look, I understand the argument that people make when they say, Bitcoin is an old technology, it's been around forever, it's a dinosaur, and, what's the whole point? Well, the whole point is that it has name recognition and it's first mover advantage. And some people will say, well, Bitcoin's kind of like the Netscape operating system or browser of the old days of the internet. And now we should upgrade to Brave browser, which would be whatever cryptocurrency you believe in as far as a comparison. But in all honesty, you have to know that Bitcoin initially is going to far outdo everything else, because it's been battle tested. It's been around 10, 11 years. It's a new technology. I mean, these are old traditional markets. These are people, I mean, them, family and friends, who are like, what, I don't understand what this is. I mean, try explaining Theta network compared to Bitcoin, which has been around 11 years, battle tested. It's going places. Hedge funds are into it. Institutions are into it. People are talking about it. So it's going to happen. Now, what is it going to do in 10 years? Anybody's guess. I have no idea. But I personally believe it's going to be fantastic in the short term. All right. Further, it states about half of crypto funds, hedge funds trade derivatives, 56%, and active short sellers, 48%. Crypto hedge funds are also involved in crypto, staking, this is interesting, 42% staking, lending, 38%, and borrowing, 28%. So when we talk about DeFi, decentralized finance, things like that, this is why I'm always talking about Ethereum. I think Ethereum is a $10,000 coin, and it is leading the way in DeFi. So if you see these types of things as far as lending and borrowing, interesting stuff. Let's move on. So this report shares results of a survey-based research conducted in Q1 2020. Great. So we have a little background. And this is just an interesting chart. It says launch of new crypto hedge fund seems to be correlated to the price of Bitcoin. So, we're always talking about, we're just retail investors, we FOMO in and blah, blah, blah. Well, guess what? So do hedge funds. Because in 2017, wasn't that many. And then all of a sudden, we had that parabolic bull run at the end of 2017. And look how many hedge funds came in. A ton. And then of course, we had a big crash. And what happened? Not so many opened up in 2020. And here we are. So, it was interesting to me because I'm like, I'm just dumb money and I'm just a retail guy and I just dollar cost average. But really, we're all human and we all are susceptible to the same problems because of our lizard brain, fight or flight and all that good stuff. All right, keep moving. So with this one, it states, this year we have classified crypto hedge funds according to 4 broad fund strategies. So you got long only, or you have people or hedge funds that do longs and shorts, quantitative and multi-strategy. And this is the big one, quantitative, and it's going to pay off in a little bit. So funds taking a quantitative approach to the market, neither a directional or a market neutral manner. Indicative strategies include market making. What the heck is market making? Well, market making are those who buy at the best bid in the current market scenario and also sell at the best offer. So great. So, they buy low and try to sell high. This way, they indulge in both sides of the financial markets. Hence, by doing so, they make a market which shows in the last stock market or stock price in the market. So that is a market maker. Arbitrage and low latency trading. Liquidity is key for these strategies and restricts these funds to only trading more liquid cryptocurrencies. So fantastic. And then we have some more graphs, family offices, high net worth individuals, which we talked about. And this is why I wanted to go over quantitative, because this is the common strategies for crypto hedge funds. So long only, long and short, it's about 20%, maybe 18 and 18, 17, whatever else. But quantitative is almost 50% of what they do here. So I noted it. That was very interesting. So I wanted to make mention of this. 2018 year-end assets under management, it was 21. 2019, 44. So we are essentially doubling. So let's see if we can hit 88 this year or even 90 assets under management. We will see. It's a very odd year. Who knows? Okay. So this really gets down to it, the whole crux of it. So what works? What doesn't? So when you do a discretionary long short, right? Sometimes you're going to long it, Bitcoin or whatever cryptocurrency. Sometimes you're going to short it. And the 2019 year-end crypto hedge fund performance by strategy. This was fascinating. So long and short average, you got plus 33% and medium plus 33%. So, okay, so a third of the time, pretty good. Discretionary longs only, 42%, medium 40%. So if you just long it all the time, you'd have a pretty good average return. So great. The multi-strategy plus 90% and quantitative was plus 58%. That was about the average, but the median was plus 30%. So really, if you just say, you know what, I'm just going to long Bitcoin, you would have done pretty great. You just would have done great and less thought process. That's what I like to do. I've killed too many brain cells. I just got to make it simple. Anyhow, hedge funds do whatever they want. But it's just interesting to note that quantitative versus longs and longs short. All right. An interesting takeaway from our survey is that there is significant survivorship bias. For example, the median crypto hedge fund performance was negative 46% in 2018 because it was an awful year. However, the median 2019 year-end performance of the funds that are included in this year's report is 74%. This provides very clear evidence that funds that significantly underperformed during the previous year had to shut down. So again, well, we're always talking about, whale manipulation and all those problems and, weak hands are fold. Well, if you just stay in, you're going to do pretty well over time. But the problem is, when you're a hedge fund, do you have the kind of money to stay into the game? That's the problem. That's why dollar cost average, because it just is easy for me and I can just let it ride. So that's that. Also, I want to bring up this point, the cryptocurrencies traded by hedge funds. I didn't know they would do this many types of cryptocurrencies, and it is a wide swath from Bitcoin, Ethereum, XRP, Litecoin, Bitcoin Cash, EOS, Binance Coin, Tezos, Bitcoin Satoshi Vision, Stellar, Monero, Ethereum Classic, Zcash, Chainlink, my Chainlink like that, Cardano, Dash, and Neo. So there is a huge mix. Now, Bitcoin, of course, is the number one for what we just talked about, but it's interesting to note that how many different ones that are out there. So there is a massive amount of information or of interest in a wide variety of cryptocurrencies. And also, I need to talk about growth, and this is about team expertise. When things first started to roll up in 2017, you had a lot of junior members, but now, from what the data is suggesting, you've got a lot of people with a lot of experience coming into the game. So while the average size of investment teams has marginally increased from 7.5 to 8.7 people, the average years of investment management experience has doubled to 50 from 24. This suggests that an increasing number of experienced investment professionals are entering the crypto space, leading to financial savvy crypto fund teams, but there may also be survivor bias. It is possible. I will just say this. When I look at projects, I look at teams. And when you have people with vast amounts of experience, you tend to do a little bit better than people who are green. Now, that doesn't always happen. Some people who have no idea what's going on seem to make it at some point. But usually when you have somebody who has a little bit of experience than somebody who is a little bit more green, really hungry to do things, that's fantastic. But you have to learn from mistakes. They just don't have to be your mistakes. And that's why I like to get people around who have that experience and who are smarter than me, which between me and you is not that hard. So it just was interesting to see where this is all going. So 2 more things to go over. Custody and taxes. So when I talk about custody here, this is the percentage of crypto hedge funds using an independent custodian. In the traditional fund management space, it is expected that funds use an independent third-party custodian. There are a large number of established players, from licensed custodians through to prime brokers, who can take custody of fund assets. This is not as straightforward in the crypto space, given the realities of the public and the private keys, which is why half of the crypto fund managers in this 2019 report said they use multi-signature wallets, hot-cold wallet setups, or other innovative ways to hold the private keys of the fund's crypto assets. So at least this was interesting to me because thankfully they're very well versed, or most of them it sounds like, about how easy it is to lose your cryptocurrency. So if they're keeping it in cold storage in like a Nano or something like that, or offline, fantastic. That way we're not going to hear about all these people losing their money like on some exchanges that we hear about in the news reports. And in this next piece here, it says, however, the crypto ecosystem has changed substantially, and there are now a large number of crypto custodians that can service the industry. Do you know what that means? That means that these institutional players, they are looking for familiarity. And if they can find custodians, which is what they use in other formats in the traditional markets, then they feel more comfortable and then we're able to get in. Now, I will just say this. It is good to have institutions because they bring money, but it is bad to have institutions because they bring all the garbage that comes with that. So let me know what you think in the comments section. Do you think that institutions are here and they are the almighty saviors to bring all the money in? Or do you think they are here to manipulate the market and to do the nefarious things that they shouldn't do, to where the prices are going to just go a little bit too haywire? Or do you think it's somewhere in the middle? Let me know what you think in the comments section. And the last part we're going to go over is taxes, because I thought this was very telling about what they're doing as far as like taxes and avoiding taxes. So legal and regulatory, top crypto hedge fund domiciles. And I want you to make note here. Top crypto hedge fund domiciles, where the office says it is, and top crypto hedge fund manager locations. See how people aren't living in the Cayman Islands. They're in the US, they're in UK, Gibraltar, Switzerland, Hong Kong, Spain, whatever else, right? I mean, there are some there, I guess. But what they do is they open up a shop in Cayman Islands. And what it states here is our data in 2019 showed the Cayman Islands was the second jurisdiction in terms of number of crypto hedge fund managers after the US. However, we believe the data did not show the full picture. Despite the investment management entity being based in the Cayman Islands, very few of the managers were physically based there. Why do they do that? Well, it's very simple, my friend. It's because when you open up the Cayman Islands, you've got some important advantages. And this article lays it out right here. Given by the fact that the formation of a hedge fund is very fast compared to other jurisdictions, as the fund can be registered in one working day. So you want to make a hedge fund? Sure, Cayman Islands, off you go, pay some money, one day, done dealing. Once the company's statutory documents are drafted and signed, besides these, investors can benefit from a set of tax exemptions, as a set of taxes are not applicable in the Cayman Islands. It's also worth knowing that the country does not impose income tax, corporate tax, capital gains tax, or the withholding tax. That's all I'm going to say about that. This is a whole discussion for a whole other video, but I just want you, if you're not familiar with Cayman Islands, that's just to get your feet wet. Let's move on. All right, the last two articles are going to go pretty quick because it's just basic information. But we talk about institutions, and they're coming fast. And Coinbase acquired the institutional crypto brokerage Tagomi. So I'm just going to scoot down. This is the whole crux of the article. The addition of Tagomi will round out our product suite for the fast-growing institutional trading market. This is on Coinbase blog, so they're kind of talking that form. It will allow us to offer custody, professional trading features, and prime brokerage services on one platform, giving sophisticated investors the seamless, powerful trading experience that they have come to expect in equities and FX markets. Essentially, let's roll out the red carpet, make sure you're comfortable. Would you like wine with that? How about some water and cheese, or whatever they do? Here you go. Here's all your stuff. Bring your money. That's it. And that's all. So let's move on to the next article. And this one, in sudden crypto turnaround, JPMorgan now says Bitcoin is significantly undervalued. Amazing how just a little bit of time it takes for JPMorgan to turn around in the grand scheme of things. So it states here, the latest Bitcoin analysis from JPMorgan is circulating on Twitter, and I could not find it anywhere, so I had to take a look at Twitter, dated May 22nd. The report from research analyst Nicholas, I'm not going to try that, looks at the intrinsic value of Bitcoin by treating it as a commodity and basing the price on the marginal cost of producing BTC or Bitcoin. And they state Bitcoin is trading 25% below what the intrinsic price should be. They believe the value of Bitcoin should be $11,593. And they're saying that essentially the price is being suppressed in some way, shape, or form. Now, this is what's interesting. JPMorgan has been historically bearish, to say the least. In September 2017, CEO Jamie Dimon said he would fire any employee who was caught trading Bitcoin because it was both stupid and against the company rules. JPMorgan's new report and apparent shift in Bitcoin sentiment comes after the bank onboarded crypto exchange Coinbase and Gemini as customers, making a potential end to the bank's ban on our anti-crypto era. So if you don't know, banking giant JPMorgan, this was just a couple weeks ago, May 12th, during the halving, which is pretty interesting. So it comes out of this. The Wall Street Journal reports that JPMorgan Chase will allow Coinbase and Gemini customers based in the U.S. to make ACH, automated clearinghouse withdrawals and transfers, marking the end of the bank's anti-crypto era led by Jamie Dimon. And same thing down here, and it states that position has melted in the wake of the macroeconomic landscape that is awash in money printing, instability, mounting debt, shrinking GDP, and a tumultuous stock market that's left investors looking for a hedge. So here's the question. Do you think this is actually a big deal, or is this just a bank just trying to put their hand into whatever they can and make some money? I personally think it's actually not a huge deal, but it moves the needle in the right direction as far as cryptocurrency digital asset acceptance. So let me know what you think in the comments section. Let's move on to our last story. So last up, this is from a man, Digital Dave. I talk about him on my channel a lot because I like his videos a lot. And his channel is crazy for cryptos, and he's been talking about Theta. He talked about Theta a couple weeks ago, and said how it was going to blow up, and sure enough, it did. And in this video, which I'm going to link at the very end, he talks about, hey, look, Theta Network has partnered with NASA, SpaceX, and Google. This is kind of a big deal. And in the video, he talks about, because people say, well, Google's now a validator, but anyone can be a validator. There's no partnership there, Dave. So what are you talking about? And he said it perfectly. He goes, you know what? To be a validator, you need to buy 5 million Theta coin. So I guess Google tends to believe in that because they bought 5 million of it. And they probably got it on the cheap. So I'm just saying. So I was trying to find a place to buy Theta because I was like, I just want to see if I can buy it. I can't buy squat. I can't get into Coinbase, not Coinbase, excuse me, into Binance, and I don't think Binance US even has it. It's on BitThumb, but I'm not from that area, and I even looked at Shapeshift. I can't buy it there. So if anybody knows, let me know in the comment section. But I don't think you can buy it. However, when I was reviewing it, I was thinking to myself, what makes this thing so great, right? Because someone said something about, well, it's just like BitTorrent. Because, you can just store things on just like BitTorrent. But I think it's incorrect. So I'm going to have you listen to this video, and that'll do it for today.
Technology today is amazing. But somehow streaming quality and load times are still terrible. Everyone has a computer with extra bandwidth to spare, especially when a machine's not being used. And now you can make money by putting that bandwidth to use thanks to Theta Token. Here's how it works. When you're watching your favorite streamer, or when you're asleep, Theta Client will tap into your extra bandwidth to relay video streams to local viewers. They'll enjoy improved stream quality and loading times, while you earn Theta tokens. The more you deliver, the more you earn. With your tokens, you can send donations to your favorite streamers, unlock premium content, and buy and gift virtual items. Theta is a new blockchain built by Sliver TV.
Okay, and then I'm not going to play the whole thing. It is interesting at the very end when it talks about how much is done as far as the test net and how many people they've onboarded and what they've done so far. So I'll link that in the description, but it's just thetatoken.org. And when I was watching the video, I thought to myself, well, that's genius, because, who doesn't like to earn passive income? That's the reason why a lot of you have downloaded the Brave browser, because you can surf the internet. That's an old phrase because I'm an old person, but you can go on the internet and you can take a look at anything you want to, and it'll pay you in the basic attention token, BAT token, just for watching ads, which you don't get in Google Chrome, you don't get in any other browser. So that's awesome. Same thing here with the Theta network. You can just sit back and go, hey, you know what? I'm gonna use my computer, so just use my bandwidth while I'm sleeping or not using it, and then you can pay me, and it's perfect. I see this as a sharing society coming to fruition. If you take a look at Airbnb, what do we have there? Well, you can use my house and you can pay for it. I'm not a hotel, but you can use it and you can pay me for it. There's another service called eToro where you can rent your car. You can rent your car out. Same type of thing. Now we have Theta Network, same type of deal. Like, I'm not using my bandwidth, so it's a commodity that's just sitting there on the shelf. Go ahead and use it and pay me for it. So why wouldn't they? And now we have that. Plus, there is a nice little deal with NASA, SpaceX, and Google. And oh, by the way, when it talks about streaming services, what uses a lot of streaming services? I think it's YouTube. And doesn't Google own or partially own YouTube still? So expect that to happen. I'm not telling you to buy Theta. I just thought it was a fascinating find. So thanks, Digital Dave. I appreciate it. And I'll link him in the section. And that's it for today. So that was a little bit longer. I apologize. I think I rambled a little bit too much, but it was fascinating stuff. I love this stuff. It's interesting. And I'll just say this. Every time I want to say thank you to all my supporters. I really appreciate it. If you don't know, there's a little join button below. The only thing, you don't get anything secret or special like a member. The only thing you get is it's like a tip essentially. And what's great about it is these little badges right here. So when we do live streams, which I think I should do, I'll probably do a live stream in this one because it's early enough. Why not? And then you get little badges next to you. So great. That's one thing. And then it goes to help support the channel and me. I appreciate it. I really appreciate it. And then that's just a couple bucks. And level 2 pays a little bit more, and I give them a shout out. So shout out to All Right Soft. Myself, who else? Dave Plummer, the Straight Talking Guy, has got a YouTube channel. Check it out. Grant Sharman. Got Bruce Wood, Baking Benjamins. If you're into Tezos, they are bakers in that vicinity, so check them out. Noel Flippin Vegas, Martin Lewin, Michael Ralph, William Howell, Chris Alexander, Tessie Ryusaki Positive, Fire Swing Golf, and our new ones, JC Durex Code, Crypto Veritas, and John Miller. So, hey, everybody, thanks you. I appreciate it. That's it for today. I'll see you on the next one.